And now we will wrap up this chapter with the following reflection. At this point, we are in a position to grasp why it was not possible to ensure the withdrawal of fractional reserve deposits by applying the so-called law of large numbers. Private bankers and banking school theorists said, look, with 10% cash backing, we can handle normal withdrawals of deposit and insure withdrawals. No. An insurance policy requires complete independence between the existence of the policy and the occurrence of the phenomenon insured against. That is why, for instance, there is no marriage insurance. What do you think would happen to marriages if couples could take out a policy, pay a premium, and if their marriage failed, receive 1 million euros each in compensation? As a married man, I will explain it to you. The success of a marriage lies in the constant daily effort and sacrifices of both spouses to make their life together work, and it is often hard, but you have to keep going. What do you think would happen if there were a 1 million euro insurance policy just in case things did not work out? Would that affect the behavior of the spouses? Of course. More than one would ditch the marriage before giving it a chance. As a result, the insurance itself would greatly increase the number of marriage disasters or separations. Why do you think it is impossible for an entrepreneur to purchase bankruptcy insurance? Someone could say, damn, the insurance companies are run by idiots. They sell fire insurance and life insurance. Why haven't they thought of bankruptcy insurance, especially now? Listen, a company gets off the ground thanks to the bold efforts of its owners, its soul, its entrepreneurs, who earn their bread every day by bargaining, negotiating with suppliers, and wooing customers. It requires a great deal of effort, and often owners have to know how to say no. One day, people will come to you asking for pay raises, people who need the money for their families, and you will have to say no. Do-goodism is appealing. What we entrepreneurs would like to do is say yes to everyone and raise workers' salaries, but we do not do it because we would go broke. We have to say no. How do you think I would behave as an entrepreneur if things were going badly and I had bankruptcy insurance coverage? Well, I would decrease my efforts to keep the company on a sound footing, and I would say yes many times when I should say no. Consequently, I would go broke. Imagine if taking out a fire insurance policy dramatically increased the number of fires. The same principle applies. The entrepreneurial processes of human action are not insurable because the very existence of the supposed insurance would condition our behavior. And in the sphere which concerns us, fractional reserve banking, deposit withdrawals cannot be insured by maintaining, based on alleged experience or the law of large numbers, a fractional reserve ratio of 10% or whatever. We have just shown that fractional reserves bring about the expansion of the money supply in the form of loans for which the collateral consists of newly created deposits. These loans are granted in the market at low interest rates, which lead entrepreneurs to commit errors on a massive scale. Sooner or later, due to the 6 microeconomic effects we have just studied, the market uncovers those errors and triggers a financial crisis at banks. People discover the crisis and go en masse to withdraw their money. It is the supposed insurance itself, the fractional reserve, which brings on the bank run or the financial banking crisis. So, we have demonstrated, in terms of economic theory, that the withdrawal of deposits cannot be insured without a 100% reserve ratio.